OpenAI recently reached a reported $20 billion annualized revenue run rate, with some sources suggesting this figure has tripled in a single year. However, the company is still believed to be operating at a loss. So how does one of the most prominent companies in artificial intelligence spend capital at such a rapid pace? In the next 11 minutes, we'll examine three key areas. First, the business model that transformed a free chatbot into a multi-billion-dollar revenue generator. Second, the 5 strategic moves that enabled OpenAI's rapid ascent. And third, whether this trajectory can withstand the challenging economics of artificial intelligence. This is Moat Margin, and we're exploring how OpenAI evolved from a non-profit research lab to one of the fastest-growing technology businesses, and why that growth may still face significant hurdles. OpenAI was founded in December 2015 by Sam Altman, Elon Musk, and a group of researchers concerned about the future of AI. Their premise was that artificial general intelligence was too important to be controlled by a single corporation. They established OpenAI as a non-profit, with $1 billion in pledged funding from leading Silicon Valley figures. By 2018, the team recognized that developing advanced AI models required resources beyond what a non-profit could sustain. The cost of training large models was increasing rapidly, and they needed significantly more capital. In 2019, OpenAI created a capped profit subsidiary, a for-profit arm that could raise venture capital with returns capped at 100 times the initial investment. This structure was unusual and drew criticism from some quarters. Elon Musk had already left the board by this point. Sam Altman maintained that this approach was necessary to remain competitive. This decision proved pivotal. Within months, Microsoft invested $1 billion, providing OpenAI with the means to develop models such as GPT-2 and GPT-3. However, the most significant turning point was still to come. OpenAI's revenue comes from 3 main streams. First, consumer subscriptions. ChatGPT Plus is priced at $20 per month, and there is a higher-tier Pro plan at $200. While reports have cited hundreds of millions of weekly active users, only a fraction are paying subscribers. Nonetheless, the scale is substantial. Second, the API. This allows developers and businesses to integrate OpenAI's models into their own products, such as customer service bots or coding assistants. The API is priced per token, so revenue increases with usage. Third, enterprise contracts. OpenAI offers dedicated capacity to large organizations through ChatGPT Enterprise and Team plans, which include enhanced security and customization options. However, OpenAI's gross margins are reportedly thin, as each query incurs real computational costs, unlike traditional software businesses. This creates a fundamental challenge. OpenAI's revenue is growing rapidly, but so are its expenses. Some estimates suggest the company spent over $5 billion on compute in 2024, with costs expected to rise. The key question is whether the economics can ever resemble those of a conventional software company. Now, let's review the 5 strategic moves behind OpenAI's growth. Move 1. The ChatGPT launch. On the 30th of November 2022, OpenAI released ChatGPT as a free research preview. While not its most advanced model, ChatGPT was the first AI product to achieve mainstream appeal. It reached 1 million users in 5 days. For comparison, Instagram reportedly took 2.5 months to reach the same milestone, and Netflix took several years. This rapid growth shifted OpenAI's position from a research lab to a consumer-facing brand. However, this free launch came with significant costs. Reports indicate that ChatGPT was costing OpenAI approximately $700,000 per day in compute expenses during its early months. Monetization became a priority. Move 2. The Microsoft Alliance. In January 2023, Microsoft announced a multi-year investment reportedly worth $10 billion. This partnership integrated OpenAI's models into Microsoft products and provided access to Microsoft's cloud infrastructure. In exchange, Microsoft gained a distribution advantage and a stake in OpenAI's future profits. This partnership allowed OpenAI to reach a vast user base through established productivity tools. It has been reported that Microsoft receives a significant share of OpenAI's profits until its investment is recouped, though the exact terms are not publicly confirmed. Move 3. The Enterprise Pivot. By mid-2023, OpenAI launched ChatGPT Enterprise, targeting corporate clients seeking enhanced security and support. While consumer subscriptions are high volume, enterprise contracts offer more predictable and potentially higher margin revenue. Some reports suggest that by early 2025, OpenAI had signed enterprise deals with a large proportion of Fortune 500 companies. This level of adoption is notable for such a new product and shifts the revenue mix towards recurring contracts. Move 4. Building the API ecosystem. While ChatGPT attracted public attention, the API became a strategic asset. Thousands of companies built products on OpenAI's models, creating switching costs and deepening the ecosystem. This is a classic platform strategy. As more developers use the API, OpenAI gathers more data, improving its models and attracting further adoption. This creates a reinforcing cycle that is difficult for competitors to replicate. Move 5. The for-profit restructure. In late 2024, reports emerged that OpenAI was considering a transition from its capped profit structure to a traditional for-profit corporation. This would remove the profit cap and potentially attract larger investments. The stated rationale was to secure the capital required for future AI development. This move has been debated. Some, including Elon Musk, have criticized it as a departure from OpenAI's original mission. Others argue that significant resources are essential for safe AI development. Regardless, this restructure could pave the way for a potential IPO, with some sources suggesting a target valuation of up to $1 trillion. Now, let's consider the key inflection points. The first was the ChatGPT launch in November 2022, which transformed AI chatbots from a niche tool to a mainstream product and triggered a surge in industry investment. The second was the boardroom crisis of November 2023, when the board briefly removed Sam Altman as CEO. Reports indicate that over 700 of OpenAI's 770 employees threatened to resign, leading to Altman's reinstatement. This episode highlighted the importance of leadership and talent within the company. The third inflection point is the recent surge in revenue, with OpenAI's annualized run rate reportedly rising from around $3.4 billion in 2023 to $20 billion. This growth has fueled speculation about a potential $1 trillion IPO valuation, though such figures remain subject to market conditions and investor sentiment. What lessons can be drawn from OpenAI's journey? First, in capital-intensive sectors, securing a strategic distribution partner early is critical. Second, launching a consumer product can create leverage that enterprise sales alone cannot match. ChatGPT's brand awareness is a significant asset. Third, building an ecosystem around your product can establish defensible market positions. Fourth, if growth outpaces margins, restructuring may be necessary to access deeper capital markets. Finally, in rapidly evolving markets, speed and adaptability can be decisive advantages. OpenAI's willingness to launch early helped it capture market share ahead of competitors. OpenAI's transformation from a non-profit research lab to a company reportedly valued in the hundreds of billions and potentially targeting a trillion-dollar IPO is remarkable. Whether this represents the greatest business pivot in recent history or a high-stakes experiment remains to be seen. For more analysis on the strategies behind the world's most ambitious companies, subscribe to Moat Margin.